Hello, I'm David Chaston with 90 at 9, brought to you by interest.co.nz. This week, get everything you need to know in 90 seconds to 9 o'clock, including news there are more signs consumer confidence is starting to rise in Europe, although from low levels. And staying in Europe, the EU financial transactions tax is now dead. Few Euro countries now want it, and they now fear a rapid unwinding of financial power and its shift to Asia and New York. The EU banks have won that one. The US economy grew at an annualised rate of 2.4% in the first 3 months of the year, official figures showed, down slightly from the original estimate. The drop in US government spending was higher than first reported. It was the biggest such decline in more than 50 years, although consumer spending resilience was also confirmed and more than made up for it. Wall Street is ending the week on a positive note, reassured that the Fed stimulus will continue a while yet. The iron ore price slumped to a 7-month low, down 30% from this year's high in February, hit by slowing demand from China and a glut of supply. However, some see it rebounding due to unusually low Chinese inventories. Gold jumped in overnight trade to $1,450 an ounce, while the rising yields in US Treasuries took a break, down slightly in late trade. And there has been a sell-off in junk bonds. Yesterday's announcement that the RBNZ was intervening in currency markets need to be kept in perspective. The RBNZ sold $256 million in April, but currency markets traded more than $210 billion in Kiwi dollars in that month. The RBNZ's foray amounts to about 0.1% of all trades and unlikely to influence anything. Governor Wheeler will need hugely deep pockets to do anything meaningful. Trading FX is very risky, especially with taxpayer money. The New Zealand dollar starts today at 80.8 US cents, 83.6 Aussie cents, and our TWI is now down to 75.9 and its lowest level since mid-March. I'm David Chaston. That was 90 at 9, brought to you by interest.co.nz.